Hi, everyone, and welcome to this episode of Money Moves. I've decided to make this series every other week, and I may move it to monthly in the future, but for now it'll stay twice a month. And first up in every episode, I go over the news articles that are driving the markets today. And first is the stimulus package getting formulated in the White House. Then I will quickly go over the fact that the Trump administration thinks the vaccine will be ready by around Thanksgiving. Then I will go over each of my passive investing accounts, starting with Worthy Bonds. Then I will go over my taxable lending club account, as well as my IRA with Lending Club. Then I will go over my Fundrise account, as well as my M1 Retire account and my higher yield savings account. I've stopped going over my options positions in this video, so if you're looking for my active investments, go over to my options portfolio video, which is currently linked above. Then, of course, I will go over my weekly tracker. And finally, for this episode, there will be some jelly at the end, which is something I enjoyed outside of the markets. If you have big dreams like owning this 8-bed, 12-bath mansion just outside of Yellowstone National Park, or if you're just getting started on your financial journey, definitely like and subscribe. It has a very cool theater room, and it's currently on sale for $15 million. Welcome to the Portfolio Bulletin. Let's get started. So the White House is preparing to offer a $1.8 trillion stimulus package. It's arguable that the Trump administration saying that they would not seek a stimulus package did drive the markets down pretty dramatically, and the fact that they are deciding to come back to the table is really the main driver for the accelerated growth this week. The $1.8 trillion package would be the highest offer yet from the Republicans, and with a little bit of luck, the Democrats might actually agree to this one. The Rona, on the other hand, is seeing record highs across the world, with the highest 24-hour period occurring on Friday at 338,779. The bigger story here is that Spain put Madrid on an emergency order Friday, which could be an indicator of future lockdowns. Economies around the world continue to recover slightly. The UK economy grew 2.1%, leaving it down still 9.1% since its highs in February. They're saying that the recovery is slowing down due to some reinforced lockdowns. However, there is at least one economist in the UK saying that their economy will shrink this month. If we start to see economies around the world starting to shrink, that could dramatically affect the recovery. And in my opinion, the longer we take to recover, the more permanent some of the effects will be. Companies like Disney are continuing to take steps that would mitigate this, like releasing their new movie Soul on Disney Plus on December 25th. They are again opting to skip theaters altogether in order to continue to drive up their revenues despite the Rona. The other thing driving the markets is a potential vaccine, which would have emergency authorization by Thanksgiving. And of course, you have a little bit of news bias here, calling it Trump's vaccine czar, or just the guy in charge of managing vaccine progress, whichever. I mean, he does look kind of creepy though. His name is Mansif Salawi, and he is an immunologist and a longtime pharmaceutical executive, and he's currently in charge of Operation Warp Speed, aka making the vaccine quickly. They say while none of the 4 vaccine candidates to enter phase 3 trials have publicly reported their data, Salawi is hopeful that the drug makers will file for emergency authorization by late November. This would mean that high-risk populations could get the vaccine by the end of the year, and he expects that it will be 80 to 90% effective. Then they call him a czar again for some reason, and list a couple of the companies that are working on the vaccine. Operation Warp Speed has been lauded, as well as criticized for its aggressive timeline, and they are attempting to deliver 300 million doses starting in January. They say Salawi is focused on the data and not the politics, which is exactly what you would want to see from a scientist, and Trump calls him a world-renowned immunologist. Salawi also specifically stated he would resign if politics interfered in the vaccine development process, which is a bold move, Cotton, but I actually agree with this sentiment. He further elaborates on this topic that he hopes events like this are never politicized, and we often forget that people are actually dying. Moving on to my investments, I know I didn't mention this in the intro, but I wanted to talk about how I moved my savings account money, $5,175, over to my checking account, and I will be moving some of that money into Yotta Bank. And the reason for that is the interest rate has gone all the way down to 0.55%, which is too low to justify continuing to maintain this account. Yotta Bank is a company that gives you tickets based on the amount of money you have in their savings account, and they do weekly drawings to determine how much money you win based on those tickets. And their prizes go up to $10 million. They have various smaller prizes leading up to that $10 million. And as I get established in this account, I will do a more in-depth review. Moving on to Worthy Bonds, this company continues to pay out 5% and it compounds daily. They are selling out of their Worthy Peer 2 because each of these are limited to $50 million worth of bonds, and they are establishing a third account for new users. Looking at my growth here, I continue to leave this money, and I don't think I'm going to withdraw it for now since I'm moving my savings account money. Once I determine how much money I'm going to put into Yotta Bank, I may move this money at that point, but for now, I will just leave it alone. If you're not satisfied with your own high-yield savings account, which are becoming lower and lower yields, and 5% sounds more valuable to you, there is a link in the description that will get you one free bond when you fund your account. Moving on to my Lending Club account, it was basically flat over the last 2 weeks. I'm up 5 cents, and that's because I have a lot of notes in grace period at 25, representing $520 in value. This is a long weekend, and since today is a bank holiday, I expect a lot of these to be processed on Tuesday, and they will be moved out of this grace period, and my account should see a jump in actual value. My late notes here went down by 2, my very late notes went up by 1, and then I had one note go into a complete default, which will be charged off, and then I had one note that was canceled and is being refunded to me. During this period, I focused on B and C note loans, and my weighted average stayed the same at 16.55. Looking at term, I'm basically right on my goal of 75% 60-month loans. Moving on to my IRA with Lending Club, this account went up by $10. And again, I have a similar thing here with 7 notes in grace period, up 3 over the last 2 weeks. I did have at least one note go into the very late category, but despite that, my overall account value is up. I took notes in all 3 categories over the last 2 weeks. And looking at term here, you can see I'm getting closer to that 50% 60-month loans. As I was recording this video, I found out that Lending Club is in fact retiring its peer-to-peer lending platform in favor of moving towards a fintech full-service bank. I will do a video in the future on what this means for us as investors, but you heard it here first. The Notes platform will be retired on December 31st, 2020, meaning that you cannot invest in any new loans after that date. Moving on to Fundrise, this account jumped almost $90, and that's because the appreciation value was assessed at the end of third quarter. I also increased the goal value to $500,000, and it continues to say that I'm on track. I think this is partly because that appreciation was assessed, and that appreciation isn't assessed in this total value. So I'm currently on track with my deposits to reach that $500,000 by May of 2040. Looking at activities here, you can see my dividends for third quarter were assessed at almost $96, and those were reinvested as well. And then I had a project that was fully completed in LA, and it returned a 10% annualized rate. In fact, they had several projects that were coming to completion, such as these Colorado Springs apartments and these Tampa area apartments. Of course, as new projects are completed, new projects are added to my portfolio, such as this commercial redevelopment in southern LA. They invested $3.1 million in a 7,000 square foot piece of land in southern Los Angeles, and this section of land is going to be turned into a parking lot, which is directly adjacent to an 11,000 square foot commercial building. They say that in the long term, they will develop this from a single-story parking lot into a multi-story parking lot, as it starts to generate revenue. They invested in this project because they think it will withstand the test of time, because this parking lot will service companies like Amazon, Apple, Netflix, and HBO Digital Content Productions. This project is expected to return 7.3 to 9.1%, and it is an equity investment, meaning that they purchased the project and not just invested in somebody else's. If you like how this project sounds and would like to invest in projects like it, there is a link in the description that will get your investor fees waived for the first 90 days. Moving on to my M1 Retire account, you can see over the last month I've gained almost $200 in value, despite having this little dip here in the markets. Basically on this day where we were at our lows, I put in $300, and since then, over the last 2 weeks, the market has rallied pretty dramatically. and I also received $36 in dividends. Looking at my by sector performance, tech has been up moderately in the last month. Dividend ETFs have been up pretty dramatically at just over 3.5%. Consumer, pretty good. Industrial's up quite a bit. Health and consumer down a little bit. Surprisingly, finance is only down 0.6%. Thought it would be down a little bit more than that, but it's doing okay. Short-term government bonds, I'm still looking to liquidate these on a downturn, but I really haven't had the opportunity to do so. Utilities up quite a bit at 8.5%. Real estate down 1% and telecom down 1%. So overall, still doing pretty well. Looking at activities for the past 2 weeks, I had dividends from Coca-Cola, Vanguard S&Ps, Vanguard short-term government bonds, and Merck & Co. Moving on to my higher yield savings account, you can see it's up almost $60, and most of those were dividend gains. And that's because this account is mostly bonds. And based on the chart, it looks like it was basically flat for the last month. Looking at the holdings, you can see what I mean. VIG was up quite a bit. Realty income was down. All of the bond funds were down a little bit. And then the dividend ETFs held up pretty well, as you saw on my Retire account. Since my last video, I did receive a bunch of different dividends, all from the different bond funds that I own. Not going to list them all out, but you can see here there's just a ridiculous amount of different dividends, even from the same funds. Quickly looking at my options portfolio, I'm not going to go over each and every position, but I just want to mention that I am moving my money over from Robinhood to Tastyworks. I will maintain a small Robinhood account to help small traders look at what can be done with a small account. However, Tastyworks is going to be my primary account. If you're interested in that, it is currently linked above. And part of the reason for that is you can see here I am up just over $500 for the last month, but you can see that the chart here is orange when it's usually green when you're in the positive. And it's just little things like that on the Robinhood portfolio that make me uncomfortable. And if you follow Robinhood news at all, they've had periods where their platform has gone down during some pretty critical trading times. And Tastyworks is a more reliable, more capable platform. Looking at my bi-weekly tracker here, you can see stocks had a pretty dramatic uptick over the last 2 weeks. This is partly because it was rolling over that first of the month, which is when I make my retirement account contributions, and also because the market has just had quite a run. Bonds continue to stay flat. I'm not really contributing to bonds because I am pretty bond heavy overall. My trading accounts basically moved with the markets, as well as a little bit of contributions. REITs went up because I got my dividend as well as my appreciation assessment with Fundrise. And Lending Club basically flat. I think it went up about $10 over the last 2 weeks. And then cash was up a little bit because I'm moving money around and I'm waiting for some things to clear before I move any more money around. Looking at the deltas here, the 2-week gain was almost 5%. And this is mostly driven by those stock gains and trading gains. If you like any of these investment platforms, there are links in the description that get you free stuff when you sign up with any of them. Again, if you're looking at Lending Club, be aware that that platform is not taking any new investments starting on December 31st. And since that platform is going away, I probably won't include it in future Money Moves videos, since it's not really valuable to new investors. Comment down below what you thought of any of my investments. What do you think of Lending Club moving away from peer-to-peer and moving towards the traditional banking environment? Do you think it will be good for them? Is it bad for us as investors? Definitely like and subscribe if you got any value out of this video. Of course, none of this is financial advice. This is all for entertainment purposes. And with that, let's get to today's jelly. Today's jelly is Rodney Mullen in a throwback flatland skating tournament. Back in the day, he was basically unbeatable, and some of these moves are pretty cool even by today's standard. So here's some clips from that video. As you could see, he is very talented, and you don't see people doing moves like this anymore. And he was doing it on a skateboard that was way less user-friendly. Comment down below what you thought of this video. If you want to watch the full video, it is linked in the description. Definitely like and subscribe before you go, and have a great day.